Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for WealthPress. Today is June 15th. The month is halfway over. And you know what I always say, let's get into it right now. So, I hate to say I told you so, but I was telling you the second shoe was going to drop. It was just a matter of time. People were getting really excited about this rally, and I was telling everyone this is just a reaction. It's not a new leg up. So let's talk about global economy. Let's talk about what to expect this week. Let's look and see what's going to happen with the bond market, the stock market, and why and how I saw this coming and how you can too the next time it happens. It's not a magic trick. There's a real method to it. So global stocks are going to open down quite a bit. Global stocks and U.S. futures sank Monday as resurgence of COVID-19 cases in China and other countries deepened pessimism. The benchmark in Paris, London, Tokyo, Shanghai all fell due to the potential spreading. Stocks are turning wobbly as investors reevaluate their expectations for economic growth. And remember, there's no vaccine, so it's hard to be relaxed. And cases are still growing in various nations, including emerging economies. That's not good. U.S. shares are set to decline about 2%, 2 to 3% on the open. I'm looking at the pre-open right now, and that's what it's looking at. Rising COVID-19 cases in Latin America, parts of Asia, reemerging second wave risks in parts of U.S., South Korea, and China. So-called clusters cases in Japan were added to the worries. Tokyo reported 48 confirmed cases on Monday. China reported 49 confirmed cases. India, reported more than 11,000 new cases. Rolling waves of outbreak, if left unchecked, could result in more shutdowns. Things are not good. China's industrial production accelerated on May, suggesting that the world's second largest economy is gradually recovering from earlier shutdowns. To fight the COVID-19, factory output rose 4.4% over a year earlier, up half a point from April's rate. Analysts at Rabo Research said the commentary on the data has been mostly disappointing. And it hasn't been all that great. So let's look at the week ahead. Today's going to be kind of calm. We got Robert Kaplan speaking. We got retail sales numbers coming out tomorrow. That's big. And we got Jerome Powell speaking tomorrow and Wednesday, but I'm not expecting him to say anything that's major or unknown. Watch for the jobless numbers and the retail sales numbers and industrial production. That's going to give us a very good clue of where our economy is heading. Separately, each of those reports is not that strong, but when you take them into account, it's going to give us a good understanding of where things are. Also, we've got jobless claims on Thursday. The numbers have been moving better. The results have been better. The consensus is 1.2 million new claims. Last time we had 1.5 million. The average is 2 million. As long as the number keeps moving lower, and it appears to be moving lower, and doesn't spike back to the higher range like 1.7 million, we should be okay. Look for 1.2, 1.1. That means things are moving in the right direction. Now, looking at the overall stock market, we had something really big happen. We had the death cross happen. I know it sounds very dramatic, the death cross. But that's when the 200-day moving average and the S&P moving average cross on the way down, and we just saw that happen on the S&P 500. This was not unexpected. I was expecting this. The question now is, how low are we going to go? The odds are really good we're going to hit the 270 level, and the odds are fairly strong we'll hit the 240 level. I don't think we're going to hit the 218 level, because that was really a lot of fear and nothing more than fear. Even the VIX index went to 80, and I don't think it's going to go past 50 or 60. But do look for a support level near the 271 level. There's really not much there. We're really close to the near-term support, which is at 295. Write this down. These are the support levels that are on the way down. And as we break each one, we're going to head lower. So the first one is at 295. The second one is at 272, and the final one is at 243. And if you were going to use Fibonacci, you would probably come out with numbers that are fairly similar. So again, 243, 272, and 295. And if you're trading the futures, I know a lot of you are trading the futures or looking at the futures. Let me give you the same numbers on the futures contract. Why? Well, why not, right? Yeah, the Dow's down about 600 points, as you can see here pre-open. Let's look at the futures contract. We still have the September contract is still in play. And let's take a quick look. It's down 60 points. Ouch. I just want to give you the levels both on the SPY and on the E-mini, because I know a lot of you trading, or at least look at the E-mini. So again, we have to cross the first. We've already passed the first level, but the second level is near the 2700, 2715 level. And the last number is near the 2425 level. You just basically have to remove a zero if you're comparing the SPY to the E-mini S&P. So 2425, 2740-ish, and we're already in the first level here overnight. So I'm not even going to go there. Again, there was a lot of indications that this was going to happen, including, let me show you. Where's my RSI? Here we go. It's already set on 10 days the way I like it. And you could see here, the RSI went all the way up to 82. 82, that's huge. And price action couldn't go higher. That was a dead giveaway. Also, put the call ratio, momentum levels, but most importantly, it was my momentum levels. The 200-day moving average was remaining very low. If you looked at the overall stock market, we were below 50th percentile, while the 50-day was overbought, and it's still overbought, which tells me we're going to go lower. Look at this. We could cool off and go higher, but ultimately, these levels are going to go lower. And this is what made me take a big pause right here. We were right up here. We never saw these levels before. As soon as I saw them about 3 weeks ago, I said, folks, we're going lower. Now, look at what happened here or here. We go lower, and then we huff and puff, and we go higher. We can go all the way up here to these levels, but then eventually we drop. And I'm expecting the market to drop to take us back to the 31 percentile over the next month or two, which means the wave is now moving lower and not higher. This is monthly data, and the odds are the market is going to be cooling off. The second shoe's dropping. We're now being fearful of the second wave. The VIX level, let me show you, the VIX levels are rising. Everything is pointing, and I mean everything is pointing to more weakness. Look at the VIX. It went up all the way to 80. It went down all the way to 24. Still panic zone. Anything above 20 is panic zone. And now we're at 40. And now I'm expecting to go about 60-ish. The level here, this level here between 60 and 80, that was just pure unadulterated panic. Don't think we're going to see that again, because the markets are a little more stable. This is not a first-time infection. It's a reinfection. But again, be cautious. India, South America, they're taking it under the chin right now, and a lot of this is going to impact the U.S. market. Also, we don't know how truthful China is being right now with us. We don't know how many people are really, really sick. So all of this is going to shake out. But the biggest indication of all was this right here. The number of stocks trading above the 50-day moving average. It peaked to the highest level in 20 years. It's like a rubber band being stretched out. And in light of the fact that, now that would be okay. I wouldn't make a big deal out of it. But the number of stocks at the 200-day moving average were below 50%. And that's telling us that the foundation has not solidified yet. And the short-term trend is already pounding on it. Let me show you what I mean. See that? Look at that. Couldn't get it up higher, and now we're moving back lower. So expect the 200-day line to move back to the 20th percentile, maybe even lower, and that'll take the stocks trading above the 50-day line lower as well. So right now, I'm looking at near-term selling pressure coming from the market. Now, I got something good for you folks. I know these are troubling and uncertain times, but now is not the time to roll into a ball and hide. It's during turbulent and scary times like these that the biggest opportunities appear. It's true. Remember my saying, there's two kinds of dogs out there. If you kick a dog, one will roll away and die, and the other one will stick up and bite you in the butt. Well, this is the time to be that kind of a dog. You got to be resilient. So these are times for waiting for good opportunities to appear. So I invite you to open your mind and watch what the number one insider trader, Roger Stone, has to say. All right? We even share the same first name. Roger Stone wants to level the playing field and show you how the world's most powerful and influential families cash in when others panic. Folks, you don't want to miss out on this. I mean, Roger Stone, he's an insider, all right? Get all the goodies before the rest of Wall Street hears about it. Our job at Wealth Press is to bring all the insiders to you so you can learn things before the rest of the world does. I let you in on the fact that the market was going to cool off 3 weeks ago, and it's happening now. Wait till you hear what Roger Stone's got in store for you, all right? You don't want to miss this. Follow the link below. Watch how you can copy the stock market moves of the global elite. Gain an unfair advantage. Learn to trade like Roger Stone. I could promise you, by the time news hits Wall Street, he already knows about it, at least most of it. This guy's the ultimate insider, all right? Learn what he has to show you, all right? I'll talk to you guys soon, and you have a great week ahead. Bye, guys.